Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Monday, March 22nd, 2010. This morning we're talking about health risk. Why are we saying health risk? Well, we're talking about the healthcare vote that took place last night, passing the bill that's going to change the way healthcare is delivered in the U.S. This is a historic bill. Presidents and governments have been trying to do it for decades, and it looks like they've finally got something done. Now, I don't know whether or not this is a good bill or not. I'm not in a position to comment on it, but what I will say is this, is that it's very uncertain, the surroundings around the bill, the different claims that are made, whether this is going to reduce the deficit, whether people think it's going to add to government, what have you. But whenever there's uncertainty in the market, that always brings about fear. And if there's fear, that means there's risk aversion, and that's what we're seeing today. We're seeing some dollar strength, commodity currencies weak on risk aversion. So let's just jump right in. We're looking at right here a chart of Euro USD, and as you can see, it broke through the 135 level this morning. Now there's still risk aversion or risk fear going on in Europe, okay, as they're talking about this Greek crisis. The IMF is getting itself ready to be prepared to bail out Greece if the EU can't come to an agreement with what to do about this. Now, Germany is remaining steadfast. Chancellor Merkel said do not expect any sort of combined group effort and a resolution to come out of this EU summit that's going to be taking place next week. So it looks like there could be some problems there. The other thing is that we're talking about this U.S. health bill. Okay, people think that this may add to the deficit. There's fear out there that deficits in the U.S. are too high. Okay, and right now there's a report this morning that Warren Buffett, okay, is actually he has to pay less interest on borrowing money than the U.S. government does. So, in other words, people trust Warren Buffett more what to do with debt and with money than they do the current government. So that's a little bit sad, but that's sort of where we're at right now. So this week we're going to see some figures in the U.S. We're going to see GDP on Friday. We're going to see durable goods. Tomorrow, news is going to be coming out of Great Britain. Okay, we're going to get the CPI figures in Great Britain. Let's take a quick look at pound dollar. Let's see here. Where is it? Pound dollar. And let's just look at it on the daily chart. So it looks like it's bottomed out a little bit. We're going to get some news. The CBI, which is a industry group in the UK, they said that economic recovery is going to be slow and sluggish there, but we're going to get their CPI figures, and if this comes in a little bit higher, then it may bring talk of the double dip recession that they were talking about last week back in the focus. So that's what's going on today. As you can see, risk aversion can come from many different places, but primarily right now the major risk out there to global recovery is debt levels that different countries have. And as more people now go through this healthcare bill to figure out what's going on, if people think that this is going to add to the debt rather than reduce it, then we could be in for some problems. So let's stay tuned to that. Be careful. Markets could be volatile this week based on this new information. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.